Catherine, I think a lot of people bought Bitcoin or maybe other cryptocurrencies thinking that perhaps they would own some uncorrelated asset, maybe an asset that would be hedged against financial calamity, especially since Bitcoin was essentially born during the financial crisis. It hasn't behaved as such at all. And in fact, when we've seen big down days, such as last Thursday in the market, we also saw major sell-off in Bitcoin. What do you make of the cross-correlation between Bitcoin, other cryptocurrencies, and traditional risk assets like the S&P 500?
You're seeing the same efforts go through. I call it the crick cycle in traditional assets, where you're seeing that crisis yield a response, improvement, and then complacency. So in the regular traditional asset classes, as in with Bitcoin, you're seeing that complacency in the market turn into crisis, creating panic. That's going to generate sell-off across the board. However, you're still going to see the appetite for trading a 24/7 accessible market really stay strong. And Bitcoin, year on year, has outperformed.
And in fact, if you look at a chart, year-to-date chart for Bitcoin, Bitcoin had been rallying for most of January into mid-February, reaching, 10,000, almost $400 dollars, and then it started falling with other risky assets. So for a while, when it looked like the coronavirus was a story for Asia, maybe parts of Europe, this seemed to be a reasonable safe haven. What do you think happened, Catherine, once it became apparent that the U.S. was not immune to the virus?
You also saw when the virus kind of took part in other parts of the world, a resurgence of trading volumes taking place in Asia when the instituted quarantine took place. So I think you'll see the same thing occur in the U.S. once we get more firm guidelines on what the quarantine means for America.
So, Catherine, going forward here, there were a lot of sort of structural changes coming with regards to not just Bitcoin, but really that crypto space in general. Obviously, a lot of folks are talking about that halving coming up in May. When you look at the current market environment, how does all of that sort of fit in?
We've seen such an immaturity from last year in this space, with institutions being able to identify who are the, here are the key players in the crypto space, and now the prices are now affordable for those institutions to come in. So you've got a much more robust system. Trading engines are stronger than ever. They've been able to test volumes that they've never seen before, and so we're really growing up with this space right now.
But do you worry that one of the narratives is busted, at least temporarily, because one of the Again, I go back to this thing. A lot of people were like, Bitcoin, the new digital gold. Bitcoin, the hedge against financial calamity. Bitcoin, the hedge against when Jerome Powell adds $700 billion to the Federal Reserve's balance sheet. These were all things that we know for a fact that a lot of people got enthusiastic by and hasn't done much. Does that make, when it's talking about onboarding new people or getting institutional money into the space so that they want to have it an allocation as part of their portfolio, does the performance of Bitcoin recently, even if it's a weird panic, make those arguments a little harder to make?
I think that markets are still trying to figure out what exactly a safe haven means. And to the extent that Bitcoin can survive when it's a math-based, technology that we can trade on 24/7, regardless of our environment, that's more sound and proof than supply chain problems that we're seeing from national traded stocks. So I continue to see Bitcoin being something that we can continue to engage with, regardless of the safety and concerns of the U.S. and globally.
Maybe engage with.
It's still a global conversation, and that's something that's super important when we're seeing something like this pandemic affect us all.